So I made this video to show pretty much what a visual representation of dollar cost averaging is. And this is the spreadsheet that I'm going to use going forward. As you can see, on the 3rd, there was a purchase for $99. I'm not sure why it wasn't $100, but 99.99, and then there was another purchase for 100. So I'm going to continue on with this going forward, and just it'll be $100 every week, and it'll update the amount that I bought and the value of it, and the current price, total investment, total amount of sats, and the dollar value of it. So as you can see right now, the profit is down 17 bucks, 9%. Um, that's just because there's a big correction in the market right now, which is actually a good day to make this video. It'll give you an idea why it's important to dollar cost average. So if you look at this, you can see Bitcoin's down 9% right now. I think it was as low as almost 20% today. Ethereum's down 18%. Whole market's down. So the reason you want a dollar cost average is because days like this happen and you don't want to get shaken out. So if you're investing pretty much your entire bankroll all at once, it could be it could be at a top, and you have a day like this and you get shaken out, and then everything goes back to normal, and you pretty much screwed yourself for no reason. So what you do want to do on days like this, you're already buying in $100 a week. So if you have any capital on a day like this, today's the day that you want to put it to work. And this might not be the bottom, but you'd probably get at least a relief bounce. And even if it, like I said, even if it's not the bottom, you don't necessarily have to go all in today. You just might make a larger purchase than $100. Instead of $100, you might put in $1,000 or $2,000, depending on what you're working with. You might put in, just to make it universal, you might put in, say, 20% of whatever bankroll you're working with, then wait on another day, put another 20% in, something like that. There's different ways to go about it, and this isn't financial advice, but like I said, I wanted to show a visual of what dollar cost averaging looks like. So over time, uh, this profit will start to go up to the point to where it won't be red. It'll take a while, but the goal is by the end of the year, when the market does correct like this and it comes down 30 to 40%, um, the profit will still be green. This is only red because it's only 2 weeks old. So as you can see here on the 10th, the $100 was at 41,000. Well, that's pretty much the top. Um, but going forward, like I said, 41,000 won't be the top. 41,000 might be support at some point in the future. So the whole point is to average in, just get a position without taking too much drawdown. It's better to have a drawdown on of 10% on $200 than it is $10,000 or 100,000 or a million. So putting in $100 at a time, you're less likely to have a drawdown on your money. And you can use that same money for days like this to buy in a bigger amount. And if you do that all the time, when you have days like this where the whole market is down 10, 20, 30%, then you'll, over time, you'll have a way better entry than if you just waited for a random Tuesday and said, I'm going to put all my money in right now. Because, example, you could have done that, and even if it was on the 3rd when I put in the first $100, you would have bought it 34.6. Well, right now the market's at 33.7. So even then you would have been down. Or if you would have bought on the 10th, same thing, 41,000, you would be down. So it's better to be down a little amount than a lot, and then just put in a larger amount when the entire market is down. Because the whole point is to buy low, sell high. That's it in a nutshell. So the other thing, when you look at this, this is zoomed out to a weekly. Um, as bad as things look right now, from a numbers perspective, dropping from I think what 42, 43,000 to 30,000, it's not really that big of a deal. You came off the highs, but even if this week does close red, it's the first red week in a month, so it's not that big of a deal. Even if it came all the way down back to 20,000, it wouldn't be the best, but it would just be a weekly retest. That doesn't necessarily mean things are even in danger. I don't think that that's likely, but it's possible. This could have been your retest right here at 22,000, but again, it's possible. So that's the thing with dollar cost averaging. You don't have to worry about that. You don't have to worry about timing the market, because you're always buying. You're buying consistently, no matter what the price is, no matter what it looks like. You're buying. Whether I knew that Sunday was going to be close to the top or not, it doesn't matter. If it's Sunday and the sun comes up, the $100 is going to go to work. So that's the easiest way to do it. It's just consistent over time, not make a big deal out of these market corrections because they happen. As you can see, you go back here to the last bull run, they happen over and over and over and over and over again. But if you're buying in, if you're averaging in the whole time, then by the time you get towards the end of the bull run, say we're somewhere in here, well, that means you have this whole leg to go. So if you're averaging in, averaging in, averaging in, by the time you get up here, even if this big correction here, even if this comes down all the way down, then you're probably still going to be in the green because you were buying in way back here. So, like I said, the whole point is to avoid a big drawdown on your capital, just week by week, little by little, invest it, and then big red days, you might want to put a little bit more in. That money that you were looking to put in, whatever that was, if you were thinking, man, I wanted to put in 10,000 because it's going up. Well, you'll wait for a day like this to put that 10,000 in. You don't even have to be perfect. It could just, you see that the market's down 10%, 20%, then that's a day that you buy because it's not often that that happens. So you want to take advantage of it when you can. And this is the website that I'm using to average in. I'm using this to do $100 a week simply because it's simple. I'm not really a fan of Coinbase. Voyager is new to me. I don't know too much about it, but they're a public company. Seems like a good Coinbase alternative. So I'm trying them out. I could switch it at any time, but I figured I'll give this a try. It's simple. You just set it up, like I said. Once you set it up, you set it and forget it. You set it to whatever day you want, however much you want to invest, and that's it. It does it for you automatically. You don't have to worry about it. So I'm going to be using this going forward and see how it works and try it out. If you want to use it, I'll put the link in the description. It's a referral link, so you can click it, and I think we get like $25 each if you use it. So if you want to try it out, feel free. And Coinbits app, I still haven't signed up for this yet, but I plan on signing up for this, and it's just another way to average in a small amount at a time. You just pretty much setting it up to where whenever you make a purchase, it rounds up the cents and to for every dollar, and it uses that to buy Bitcoin. So forget there was another company that used to do it with stocks. I think they're still around, but this one does it with Bitcoin. So if you say you went to Starbucks and you bought a coffee for 4.79, it'll round it up to $5 and take the 21 cents, and it'll use that to invest it. Like I said, it's just another way to invest a small amount at a time. I'm going to be trying this out too, and I think between both of those two, I'll have a good way to average in small amounts over time, and I'll just keep tracking it from there. But like I said, as you can see, we're down like $20, 20% or 10% so far, but it's nothing to worry about. It happens. The whole goal of this is to focus on the long term. So I'm not even really going to start considering uh, cashing anything out or really looking at and analyzing the profit loss until I think fall time at the earliest. Fall time is, I think, a good time to start paying attention, maybe August, because I'm thinking that's where it is possible for the bull run that's going on now to actually be over. Not that that's 100% chance, but it's kind of more like a yellow light. You don't know when exactly the red light's coming, but you want to start slowing down. So it won't be till around August I'll start looking at things. But even then, if I do plan on cashing anything out, then I don't think it'll be the whole investment. It'll just be enough to where, like I said, something to where I can avoid drawdown. So if there's a large amount in there, or not even a large amount, but there's a large amount of profit, I might take some of the profit off the table and then just keep averaging back in, not stopping the $100 going in, but taking some of the profit off the table and then keep averaging in from there. That way, same thing, you're avoiding drawdown. If you have a big market correction like this to where you're coming down 80, 90%, then even if you were averaging in the old time, by the time you get to the bottom, you're gonna feel something. So it's better to take some off somewhere in this range whenever things are starting to get really overextended. Um, and like I said, I don't think that'll be for months. So I'm not really worried about it right now. Uh, the little $20 drawdowns, 10% drawdowns, they'll happen. But like I said, every Sunday, just keep buying, and eventually this will stay green. And every now and then, like I said, you'll have to do something, but it's maybe once or twice a year, or it's every 2 years or something like that. But that's it. I hope this helps put things into perspective from a visual perspective. That way you can see what I'm trying to do. Um, and this will just continue on every week. I'll add another week. The price I bought at, it'll be $100, how many sets I got, and what the value is at the time I'm making the video. And hopefully this will start turning green and it'll make even more sense. Right now it probably looks crazy because it's why you're putting in $100 and you're down, but it's not about being perfect. It's about being in the market. That's the whole point. You don't want to have to time the market. You want it to be on autopilot and be easy. So that way you can catch big moves like this that last for a year at a time. So we're here. We still have some ways to go. It might only be a quarter or half of the way into this, and who knows where it stops. So that's it. Like I said, thanks for watching. You find this useful, like the video, hit subscribe, and I will update you next week.